What's up, everybody? This is Ryan from the Forex Trade Room coming to you today. Do a quick top-down analysis on a pair that I have my eyes on. So I want to walk you guys through our process. If you guys have any questions, leave those in the chat. And don't forget to like, subscribe, and share. And leave your thoughts on this pair. So the pair I'm going to break down today is the Aussie Swiss. Looking at this pair from the monthly time frame to start. What we like to do is initially start out with identifying our extreme highs and our extreme lows. All right, so we'll start here, extreme high and our extreme low. What this allows us to do is help us to see visually that at the end of the day, the market moves ultimately in a range, right? Side to side, extreme high, extreme low. So we start out here. Next, we bring in our support and resistance on the monthly time frame. Now, when identifying support and resistance, you like Smart Trader has technology that's built in that allows you to identify these levels really, really simply. But the definition of support and resistance is a 5-candle formation, right? The 5-candle formation includes a center high point, 2 candles to the left, 2 candles to the right that are lower for a swing high, and a swing low is a center low point with 2 candles to the left and 2 candles to the right that are higher. All right. So here we have these levels of resistance that we will mark out on the monthly time frame. Right. I use black from a monthly perspective just to help me identify those areas relatively quickly as I move through the lower time frames. All right. So we have resistance levels here, and these are our most recent and most relevant levels. All right, so those are our monthly levels. Our support level is here at the all-time low, so we'll leave that as is. The next thing we'll do is we will take these levels down to our lower time frames. We want to be able to see these monthly levels on our other time frames so that we can identify those there as well. All right, so now we'll move to the weekly time frame. Here we'll do the same thing. We're going to identify swing highs and swing lows for support and resistance on the weekly time frame. Overall, when we get down to the lower time frames, you want to be able to have a full understanding of where the market is moving, okay? Where the market is moving. And we want to know, are we coming into key levels that could be high probability U-turn points in the market? All right. So from a weekly perspective, these are our resistance levels, right? And again, our next level of support doesn't come from a weekly perspective till down here at 53,414. Right. So what we'll do here is we will then take these weekly levels and we'll take these also down to our lower time frames. Okay. So that as we get down to the 1 hour and look for potential entry opportunities, we'll have these levels to also play from and be aware of. Okay. So that's a weekly time frame. Now we move to the daily. Here on the daily, we're doing the exact same thing, swing highs and swing lows. So here, this resistance level is in line with the previous weekly level. So that level will stay the same. And we'll use red for our daily level. Okay. So red resistance level there. We got a resistance level here. And we have a resistance level here. Now, when it comes to support, we have a few levels of support that come in on the daily time frame. Okay, these levels come in from the past, right, back in 2020. So we will mark these levels out as levels of support for us to be aware of, like so. Okay, support levels there, right? Now, a lot of times people will tell you to look left to find your key structure points, right? And you can look left to identify those areas. As those levels get broken, the market creates new levels, right? The market moves in waves, moves up, down, and sideways. All right. So that's what creates those levels of support and resistance at those swing highs and swing lows. Okay. So now we have our key levels of support and resistance. I stop on the daily time frame because these levels are really, really strong, monthly, weekly, and daily levels. The market has been to these areas multiple times and has served as support or resistance. There's a lot of data behind these points, okay? So that's why I use these levels for my support and resistance zones. Now, the next thing we do in this top-down analysis is we take a look at it from a Fibonacci perspective, okay? So the way we use the fib in Smart Trader has the smart Fibonacci technology and allows us to mark out all of the fib levels as the market moves. Okay. You don't historically, you see people draw the fib from extreme high to extreme low, and you miss out on a lot of movement in between that. And at the end of the day, you're asking, where is that high going to be? So here, the way we utilize the fib is in this fashion where we have the first swing high and swing low, and then we're able to plot out points with retracement levels and extension levels that gives us key entry points and key take profit levels as well. Okay, so here we see as the market moved down, it took out our A in this fib. Okay, so what we'll do is we'll start running our fib from the top to the bottom. Okay, and we'll work until we get to the point where the fib extends out to where price currently is. Okay, so here on the daily time frame looking, we see this is our A, this is our B, right? A boundary, B boundary. We had a shallow retracement and price pushed to the D extension, which is here. Okay, at the 618 D extension. And then we got a rejection. Okay, 618 level at a key level of support. Okay, so that's key for us to understand is once we get a new swing low to form here, our new fib will come in and be present. Okay, so that's what we know on the daily time frame. Now we'll take these levels, these daily levels, down to our 4-hour time frame so that we have them on our lower time frames as well, right? So we have an overall idea of where we are in the market, right? Price hit a D extension. So we're looking at a potential retracement opportunity coming on this Aussie Swiss, right? We get to key levels and we get pullbacks, okay? So on that pullback, we'll look to play what we call a counter trend move. Now you'll have a lot of people say, well, I don't trade counter trend, and that's fine. But the market, we know the market moves up, down, and sideways. So if it moves up, it's an opportunity for us to trade. Okay. So we took those levels down to the 4-hour. So we'll drop to the 4-hour time frame, and we'll look to see where things are on the 4-hour time frame from support resistance perspective, and we'll take a look at it from a Fibonacci perspective as well. Okay, so here we are on the 4-hour, right? And we see price push down to this level. This is that swing low where price hit the D extension on the daily time frame. We got a rejection, and then price came back to retest that level and currently is holding at this daily support level. Okay, so we know we're at a key support level that we want to keep our eyes on. So now we'll come to the high and we'll run our fib from the top to the bottom, like so. Okay, so now looking at it from a Fibonacci perspective, we have some key data that we want to take a look at here. Okay, so we have our AB boundary and we have a shallow retracement. Now, what we call a shallow retracement is anything less than a 38.2% retracement. Okay, that's a shallow retracement. A lot of times when you have these shallow retracements, what you get is price will push down to this 118, 127 zone. Okay, this happens approximately 80% of the time, where you get a shallow retracement, less than a 38.2% retracement. Price will push down to this 118, 127 zone, and then what you'll get is a deeper retracement, right? You'll get the market will make its waves, and you'll get a deeper retracement. Okay, deeper than a 38.2% retracement. Okay, so that's what we're looking for here in this scenario. Right, so we'll back those out, and this is what we have. So we had a breakout to the upside, a retest of that daily level, and price is holding. So we have this opportunity to trade counter to trend here in the market, right? So that's data that we want to remember as we move through the time frames. Okay, so now as we get down to the 1-hour time frame, we want to take a look here for our potential entry opportunities. Okay, so in doing so, right, we'll run our fib from the high to the low. Okay, and here as well, what you see is similar to the 4-hour time frame, where you got shallow retracement, you got less than a 38.2% retracement, price pushed down to this 118, 127 zone, then came down to test that daily support level, right? Which it also tested here. Okay. And it's holding. You got a nice rejection and price is pushing back up to the upside. So what this tells me is we could be in for a decent retracement back to at least the 38.2 on the 1 hour and the 4 hour time frames. And we could potentially push deeper. Right. So we're looking for an entry opportunity here. So the next thing that we do is we draw our trend lines. Right. And the goal of the trend line is to get as close to the lowest point as possible without cutting off any wicks. Like so. Okay. As close to the lowest point as possible without cutting off any wicks. The trend line tells you direction and momentum, but it also tells you when the direction and the momentum have shifted when that trend line gets broken. Okay. So we got this push down. So what we're looking for now is we're looking for a trend line break, for an entry opportunity here. Now, on that trend line break, we want this to be a strong bullish break of the trend line, right? If price consolidates and moves sideways through the trend line, that will give us some indecision, right? So we want to make sure that's a strong bullish candle similar to this that breaks the trend line. Once we get the break and the close above that trend line, then we'll look for a buying opportunity back to these deeper levels within this AB boundary. Okay. Now, when you're setting up your trade, what you want to do, right, is you want to make sure you have proper risk to reward. Okay. So on this break, what we'll like to do is set our stop loss below the swing low. Okay. We got a swing low here, 2 candles to the left, 2 candles to the right, swing low there. So we'll want to set our stop loss below that swing low. Stop loss below the swing low there. Now we'll measure what that stop loss is once price breaks. Currently is 33 pips. Once price breaks that trend line, potentially there'd be 44 pip stop loss. Okay. So a 44 pip stop loss, which we'll identify this in red, like so. Okay. For potential of the gain, okay, or the reward. Okay, so this is your risk to reward setup here. So 44 pip stop loss for potential of, if we go back to the 618 retracement level, 73 pips. So you're almost at a 2-to-1 risk to reward here on the 1 hour time frame for this Aussie Swiss pair, right? Looking for this retracement to happen back to the upside, right? So this is what I'm looking at on the Aussie Swiss, short-term play back to the upside. We'll watch, see how things move. Leave your thoughts in the comments. Are you looking at the Aussie Swiss as a retracement opportunity? What are your thoughts? What are you trading? Remember, like, follow, subscribe, and share. Appreciate you guys. Have an awesome day.